Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. In the studio with me, my colleague Suyash Maheshwari. Suyash, good afternoon.
Good afternoon, Shweta.
I know you're busy with all the results that are just pouring in, but let's quickly...
Strength throughout the session. However, in the afternoon trade, we saw a slight dip where Nifty also dipped below the 19,800 mark, but took support at around 19,770 sort of levels. The index managed to climb that levels in the last hour of trade, and it closed above the 19,800 mark as well. Now, Sensex on the other hand gained about 260 points and managed to close above the 66,400 levels. Now, Shweta, the broader markets were also buoyant. Nifty mid cap 100 was up about 0.5%, whereas the small cap index rose about 0.9% in today's trade. Now, all sectors also ended today's session in the green. The focus today, the charge was led by the banking and the financial stocks. Nifty Bank was up about 0.42% and managed to close above the 44,400 sort of levels, whereas Nifty Financial Services gained about 0.65%. PSU banks, Shweta, gained about 0.54% in today's session, and the private banks gained about 0.35%. Among other gainers was the Nifty FMCG pack, which also ended about 0.5% higher, whereas the auto index ended on a flattish note. Also, the IT and the media pack ended on a flattish note, gaining 0.1 to 0.14% in today's trade.
All right, that is as far as sectors broadly is concerned, but PSU Bank there outperforming the rest of the indices on stock markets today. Let's quickly get in Mohit Gang joining us on the show. Mohit, thank you for taking time out. Good afternoon. Quickly run us through what are you making of a volatility that we are seeing over the last trading sessions on the Lal streets, but specifically today, markets are ending on a positive note, positive territory. Are the support levels for Nifty now at 19,800? Would that be your assessment?
Hi, Shweta and Suyash. Always a pleasure to be speaking with you. Look, honestly, I've been maintaining for quite some while that the inherent strength of the market is fairly strong. And on your show itself, I have reiterated that for quite some while. In spite of the geopolitical tensions, in spite of crude spiking up and all which is happening on the Israel front, I think the markets have not shown any signs of correction or any signs of weakness so far. The flows have been very strong, especially the DII flows have been fairly strong, and the result season also is expected to be moderate, right? And with the ongoing festive season, I think it's a guessing game out there, and people do anticipate and expect that the consumption demand will be fairly strong, given that we are hosting the World Cup, given that it's the Diwali time, the Navratra time, and then we head up straight into Christmas and the New Year, right? So it's celebration through the quarter. And I think markets are not wrong either to anticipate that the consumption demand will remain very strong and very robust. Inflation numbers have been cooling off. The WPI numbers continue to be in the negative territory. The retail inflation also should be easing off further. So the chances of the bleak chances of rate hike, if they were out there, are also not likely, right? So all in all, I think the positioning of the market is looking very good, and the strength of the market is looking fairly good from all fronts.
All right, good positioning, a strong market. But since you talked of inflation and you talked of a rate hike, Mohit, before we jump into other important news items, you suggested that possibility of a rate hike, if at all, was still existing. That has been brushed aside solely due to how inflation numbers have turned out to be. WPI inflation continues to be negative for 6th straight month, and CPI inflation has also sprung a surprise. It beats a whole host of estimates. Are you looking at a possibility of a rate cut perhaps likely within this financial year, or the possibility of a rate cut continues to be perhaps second quarter of next financial year? What are your expectations?
Shweta, honestly, I think rate cut is too far-fetched, in my opinion, right now. I think, yes, inflation numbers have been positively surprising. I continue to actually be extremely surprised by the WPI prints, and I'm really not sure how
Okay.
that is happening, but it is happening. On the retail inflation front, I think the food prices have dramatically cooled off, and it's just oil which is stubborn right now. And if there is some cooling off which happens across the on the oil front, then I think the inflation print on the CPI will also considerably ease off, and I think RBI is waiting and watching for that. Honestly,
All
but I
right.
think they're well within their target range
Okay.
in terms of what they have projected, not within the target range of RBI, but within what they have projected. So my sense is rate reduction is still far away, but rate hikes definitely out of the window for now.
Okay. All right, that is as far as rate hikes is concerned. But corporate in India and the earnings from corporate in India continue to pour in. Bajaj Finance results are just out. Mohit, continue to be with us. Suyash, quickly run us through the numbers.
So Shweta, the numbers look robust, although on the profitability front, the numbers are slightly below the street's expectations. Now, net profit for the quarter stands at around 3,550 crores, whereas in the Q2 of FY23, it was at about 2,781 crores. So we have seen a 27.8% year-on-year rise in net profits from Bajaj Finance in the previous quarter. Now, net interest income, which is the difference between the income earned and the income interest earned and interest expended, stood at about 8,841 crore in September quarter versus 6,997 crore in the year ago quarter. So this is a 26.4% year-on-year jump in net interest income. More numbers, Shweta, are awaited. I think the numbers have just started trickling in. So I'm just looking at the first draft that is available. Bajaj Finance stock also, Shweta, ended about 0.9% higher. In the last month or so, the stock has gained about 7%. Year to date, it is up about 25%. Outperforming both the benchmark sensex and nifty. I mean, Mohit, I know you must have not gotten enough time to look at the numbers, but what's your first reaction from the results of Bajaj Finance?
Guys, honestly, I think the print, as you rightly said, is a little below, tad below Street's expectation. I think Street was expecting a 30% rise on the profitability front, but I think 27.8 is a very, very robust number, which is what I see on your screen. And honestly, I think it's all falling in place for them. They have just recently launched their new AMC, which has mopped up good AUM in the recently launched NFOs. They're planning to raise more capital. They are actually bracing up for the challenge which perhaps a Geo Financial Services will pose to them. Though their margins have shrunk a little because of the capital cost and everything, but I still think it's a long-term bet and should be a part of investors' core portfolio. And I continue to believe that they are doing fantastically well out there.
Now, actually, Mohit, as you rightly pointed out, margins was expected to be a concern this quarter given the higher cost of funds. The numbers are not out yet, but the expectation is that the net interest margin will compress by about 30 basis points on a year-on-year basis and come in at around 10.2% versus 10.5% year ago. What are your projections, Mohit? Similar sort of numbers you are also expecting from Bajaj Finance?
Yeah, look, I think margins should compress, Suyash. Degree and magnitude obviously will come out once we read the results in greater depth and detail. But my sense is yes, whatever numbers you were quoting, 10.2 to 10.5 is the range. It should somewhere hover around that range itself. And they are a tad lower, but I think that's all baked into the price. That's all baked into the stock. They are out there raising capital, which they don't need perhaps. But I think it's more of war chest, which they're trying and building up, and which also shows the ambition of the whole group. I think that's what the market is kind of liking it. Honestly, I think they're showing that audacity of ambition. They want to go all out, take it head on with perhaps Geo Finance, and want to continue to be the market leader, right? And preparing for that, I think it's never bad.
Now, Mohit, any short-term view on the stock? I mean, we are seeing the brokerage views coming
mostly
in.
Bullish.
Mostly bullish. Morgan Stanley, in fact, has a 10,500 target price on the stock, implying an upside of about 30% from today's close. For Jefferies, it is a top pick in the NBFC segment. Citi, however, is neutral. What's your take on the stock, sir?
City, honestly, I think I've read the report from which cities put out on this one. I think they are not very bullish on the rural consumption and the rural credit part of this entire thing, and that's where they continue to remain neutral. If whatever I understand little of that report, but otherwise, I honestly believe, as I told you, it's more a strategic and the core portfolio of an investor. It should be obviously a long-term holding. Short term, you can never predict which way the market honestly goes. It's more liquidity and emotion driven. But in on the long term charts, I think this is a fairly robust script to hold, and this should be a part of any investor's core portfolio.
All right. And how do you see the market heating up, the entire NBFC space? We're all awaiting, I think the competition is awaited, JioFin and its entry into the market. Whenever that happens, maybe within the next couple of months to, maybe by the end of this year, whenever that happens, NBFC space seems to be gearing up for a fresh competition in horizon. What is your view on NBFC space, and do you think Jio is going to be a formidable competition? If yes, is Bajaj Finance prepared?
Honestly, you can never write off Jio, Shweta, right? And they have the kind of capital, they have the management expertise, and plus, above all else, they have the execution capabilities, right? So you can never write off that franchise. Comes from a very strong pedigree. The profitability growth on Jio also has been fairly robust, right? So I think yes, it's a great competition, and it's good for the industry. It's good for the consumers. It's good for the credit market. I think both the companies will try and take credit down the ladder to the unbanked population of this country. And as I always keep maintaining this, Shweta, that there's no dearth of people who want to borrow money in this country, right? You have to have the right credit checks in place, and you have to have the right distribution in place. You will always find a market out there, right? So it's just about being the leader in market. Right now, I think Bajaj Finance is heads and tails above anyone else, heads and shoulders above anyone else. It will take some while for Jio to be capturing some market share, but I'm pretty sure they will do it fairly fast.
Okay.
Now,
and looking at Jio results.
Jio results also came out yesterday. We have seen a 100% rise in profit on a quarter-on-quarter basis. Now, Mohit, does the numbers make any sense, that given the fact that the numbers that were reported were from the subsidiaries of the company, and the new business model, like none of the numbers were from the new business that is expected to come from the next few quarters or so?
Suhesh, I get what you're saying. Look, it's still a very small base right now, and finally, it is very difficult right now to pass any opinion on that. I'll go with what they've reported. They've reported 101% growth on the profitability numbers, and we will take it as it is, right? As of now, as I told you, the base is not as so large as compared to a Bajaj Finance or any other thing. And I'm sure within a year or so, the whole range of their offerings, their services, different parts and segments of their businesses, perhaps will become more clear, and we will get a fair idea of what segment, what part is growing and contributing to the overall numbers. So as of now, I'll just take it the way it has come.
And I was also looking at the cash flow statements from JFS in the first half of FY24. In fact, the cash flow from operations were negative. Is that a surprise for you?
Honestly, Suresh, I have not gone into the details of the result as of now. So for me, it's very difficult to comment on this cash flow part as of now.
All right. And since we are with Jio, let's also quickly take a look at other stocks that we are tracking, Suyash.
Yes, Shweta, let's start with the gainers in today's session. Now, BPCL was a top gainer in today's trade. The stock was up about 2%. In fact, it snapped a 2-day losing streak after Brent crude eased at around $90 a barrel mark, as investors are awaiting updates as far as the war front is concerned in the Middle East. Power Grid Corporation was another stock which touched a 52-week high today. The stock was up about 2.07% at close today. It also extended its winning run to about 6 sessions. However, volumes for the day were low compared to the the previous day. Today's volumes were at about 87 lakh. In the previous session, we saw volumes of about 2 crores. Coal India continues to rank among the top gainers. In fact, it's on a 4 4-session winning streak, and it also touched a new 52-week high in today's trade. Now, among losers, Shweta,
since we continue to see Coal India as one of the top gainers in consecutive sessions now, let's also quickly understand from Mohit what's helping Coal India here. Mohit, is it the demand for coal? Are the fundamentals looking stronger than ever? What exactly is pumping up the stock?
Look, my sense is I think it's an overall rally on the PSU front, and the entire space per se has been rallying a lot, right? And standalone on the Coal India side, obviously the numbers have been improving, and the demand is also fairly robust, right? And obviously, the energy consumption demands of India as a country has been growing, and Coal India will continue to be a leader in the pack out there. So I think all those secular trends are still strong and fairly robust. But my sense is it's more about the entire PSU pack and the play which is happening on the street right now. I think the stocks were long undervalued, and some of them are finding reckoning with the investors now.
And Mohit, also, what's your take on the OMC pack? I mean, they have been highly volatile given that the kind of price movements we have seen in crude. Would you recommend investors staying away from both OMCs and upstream companies, or upstream they could look at because of the they benefit from the surge in crude?
Look, Suresh, honestly, this is one space which is a very tricky space, right? In spite of the oil prices being deregulated, government in some way or manner still tries and controls, right? All these entities. So this is something which is very, very tricky scenario. As of now, obviously, the BPCL, HPCL, IOC pack has been doing well. Again, I think it's one of the larger themes of the entire PSU pack doing well, and obviously, oil prices have been helping the
Hi,
oil
Feroz,
marketing.
can you hear me?
Sorry, am I audible?
Yeah,
Yes,
Mohit,
yes,
please
Mohit,
go
you
ahead.
are audible.
Okay, sorry. Yeah, so I was just saying that. So my sense is, look, honestly, I try and be away from this pack because it's a very tricky pack. Government intervention is fairly high. Given that it's an election year, we might see some tweaks here and there. We have already seen a lot of subsidy being announced on the LPG cylinder side, right? So you just don't know what is going to happen in an election year. It's always good to be away from at least the oil companies.
Also, let's quickly take a look at the losers
Yes, please.
in today's session. Now, Tata Motors was the top loser today. The stock fell about 1.5%. Now, the stock has been on a bit of a run-up. In fact, it touched a lifetime high in yesterday's session. However, the stock ended about 1.5% lower. Now, the Tata Group company is also looking to sell about a 9.9% stake in the IPO bound Tata Technologies, which was one of the reasons why we saw a surge in the stock prices. Another stock which saw some correction was L&T. Now, L&T was on a 2-day winning streak. The stock ended about 1% lower. Volumes were low, however, which should give some respite to the investors of L&T. Among other losers was UPL, which was down about 0.9%. IndusInd Bank also ended about 0.86% lower ahead of its Q2 report card,
Right,
which comes out tomorrow. And TCS continues to remain under pressure. The stock has fallen about 3.5% since reporting its Q2 numbers last week.
All right, that is, of course, as far as top losers is concerned. Mohit, thank you very much for taking time out. Thank you for joining us here on Newsline. We appreciate your time.
Pleasure.
Shifting focus now, markets regulator, Securities and Exchange Board of India and the Reserve Bank of India are reportedly probing about a dozen cases of alternate investment funds. Some of these AIFs are allegedly being used to circumvent regulations, including evergreening of stressed loan, as per a Reuters report. Now, reports also suggest that capital markets regulator has detected at least a dozen cases involving 150 billion to 200 billion rupees where AIFs have been misused to circumvent rules of other financial regulators, including Reserve Bank of India. Remember, the AIF space has grown tremendously in the past, 10 times in fact in the past 5 years, to become a 8.5 lakh crore industry. The probe can lead to disclosures and greater scrutiny around this investment category. Let's discuss the implications. In fact, Feroz Aziz joining us on the show at this point in time. Feroz, can you hear me?
Yes, I can.
Hi, Feroz. Feroz Aziz, Deputy CEO, Anand Rathi Wealth, with us on the show. Feroz, thank you very much for taking time out. I want to begin by asking, what is the implication of such a probe into AIFs? Many reports are suggesting it's a very minuscule part of larger AIF category. Would you agree with that, number one? Number two, what sort of, allegations are we looking at and how serious are they?
Yes, from a proportion standpoint, of course, it's a smaller proportion. If you look at a few lakh crores and then see a couple of $1 billion or 150, 200 billion rupees, of course, as a proportion, it's a very small amount. Point two, AIFs, of course, have had several regulatory changes in terms of disclosures. And as time progresses, of course, the regulator would want more and more transparency. So that's a normal course of increased transparency. AIFs were brought into picture in 2013-14, and I think it's been about 10 years. A few discussion papers and a few circulars in terms of disclosure norms and other transparency matrix have happened, and I think this can catalyze it for sure. And since AIF is 1 crore minimum ticket size, I would expect an ultra HNI or an HNI to understand the implications of his purchase. So I think since it's 1 crore plus, it doesn't bother me as much because it's not a retail instrument bought by somebody who doesn't understand the underlying.
All right. So should it bother HNIs? Should it really bother people with high net worth individuals? Should it bother them, and to what extent if, AIFs come under increased scrutiny of the government? That's number one. Number two, if these allegations are proven to be true, if they are probed and the investigation proves that these allegations were in fact true, what happens thereafter?
I think HNI and ultra HNI have to be more happy about the vigilance which the regulator is doing. I think mutual funds also have had some degree of regulatory investigations in the past. And it just says that how the regulator is trying to find a needle in a haystack and successfully doing that. So I, as an HNI, if I was an AIF investor, Anand Rathi Wealth does not recommend an AIF, and it never has for the last 10, 12 years, for different reasons though. If I were an AIF investor, I would say that, yeah, somebody is watching and the regulator is very, very vigilant. And of course, refinancing of bonds is not a very non-popular concept, but anything which is circumventing an RBI rule is also being looked at, is itself a great degree of calmness that the regulators are very vigilant, and that's what I think capital market should provide for an investor, be it a retail or an HNI. So I, as an HNI, would find comfort in this news rather than discomfort, to be honest.
All right, and I know I have to let you go. I know you have a commitment, so perhaps my last question to you: how much has the AIF fund as an industry, as a fund, grown in the past couple of years, and what sort of trajectory are you looking for AIFs in the future months and years to come?
AIFs have grown dramatically. There are three categories, A1, 2 and 3. The category 3 is largely something which can do everything under the sun, under certain degree of limitation in terms of exposure. Category 2 is mostly the closed-ended funds. Category 3 has seen the sharpest rise, and I think it will further go up because fund management, several CIOs from the mutual fund industry have also ventured into AIFs when they've started their companies and platforms, and they've done justice to people's money. So I think AIF 3 will definitely have a surge, and the growth trajectory will continue. AIF 2, I think, has not been able to deliver post-tax, post-expense returns. So I think that will not grow as much. So category 3, positive. Category 2, not so positive from a growth standpoint.
All right, Feroz, thank you very much for taking time out. Thank you for speaking to us here on Newsline. And moving on, as Israel-Hamas war enters 11th day, the situation in West Asia remains turbulent. The question that continues to perplex many: who is funding Hamas? The answer to that is the global network of cryptocurrency, cash and charities. As per a Reuters report, Palestinian militant group Hamas uses global financing network to funnel support from charities and friendly nations, passing cash through Gaza tunnels and of course using cryptocurrencies to bypass international sanctions. Earlier this week, Israeli police blocked cryptocurrency accounts used to gather donations and funds without specifically specifying how many funds or what value of assets were frozen. But of course, Hamas continue to be funded there through cryptocurrency. My colleague Krishna Kumar here with us in the studio. Krishna, good afternoon. I think this reconfirms one of our previously held belief, a report that we have seen time and again, that is crypto is in fact used to finance terror.
Right, and the investigations into them have been ongoing from the Israeli side for the last 2 years, Shweta, and the latest in that is the fact that Binance and Tether, Binance, one of the world's largest crypto exchanges, and Tether, which is the most used crypto token for trading, which is a US dollar pegged stable coin, as it's called, Tether. About 32 accounts related to Tether have been frozen. Hundreds of accounts on Binance, hundreds of wallets on Binance have been frozen. That's the latest measures that have been taken. All of this post the beginning of the Israel-Hamas war on the 7th of October. All of these actions are happening in a sped up way post the 7th of October, because that's been the seriousness and the gravity of the situation. But these investigations have been building up for the last 24 months or even before that. There was in fact, there was greater findings even in the month of August this year regarding transactions that are taking place between big wallets in the Middle East, between accounts which often use these kind of transactions to convert money into different sovereign currencies where they need to deploy these monies. So in a sense, what we're witnessing right now is an outcome of both sustained effort for the last 2 years and of course the breakout of the Israel-Hamas war. Shweta.
All right, and this confirms our beliefs that there is in fact a terror network that is financed directly through crypto, hence the need for a crypto regulation. What G20 countries have been demanding, perhaps have agreed on as well, a global framework that governs crypto, that does not dismiss crypto as a currency that does not exist, but in fact exists and continues to fund active illegal activity. So hence the need for a framework that we've been waiting for.
Absolutely, and in fact all of this financing and rerouting of funds through cryptocurrencies takes place simply because it's not regulated. Because first up,
so not recognizing is not the answer.
Exactly, not recognizing is not dealing with a situation that has evolved over a period of time and then letting it be, because letting it be means that money being transacted in these amounts across borders. Bear in mind, crypto trading and transaction means money exchanges across borders without regulation. That is certainly a problem, and no wonder that India, and of course as the president of the recently concluded G20, made it a point to make that one of the top as far as the agenda of the G20 summit in New Delhi was concerned. And you're seeing immediately, not very far after that, a real instance of Israeli government, Israeli defense forces taking action on these accounts, letting Binance know, letting Tether know. In fact, they want more action. They're not happy with what is the kind of hundreds of accounts. They want more, double the number of accounts that have been frozen, double the number of wallets that have been frozen, and further deeper investigation into how funds are being rerouted for terror purposes through cryptos. Shweta.
All right, thank you very much for joining us on that, but let's move on for now. A big story that we are tracking perhaps interests to Krishna more than it interests me, and that is the PVR Inox on Saturday 14th of October announced a PVR Inox Passport. Now, what is a passport? A movie passport, as announced by PVR, is a subscription pass using which one can watch up to 10 movies for just 699 rupees a month. The passport will help fund film industry and of course motivate consumers to watch more movies in theatre frequently. Now, moviegoers can purchase the passport for a minimum subscription of 3 months, and the passport is non-transferable in nature. Now, the passport, however, excludes premium offering including IMAX, Gold, Lux and Director's Cut. But a passport to watch movie. What does it entail, Krishna?
It's exactly how it sounds, Shweta. Passports are to do with airports. How is it that a passport has got to do with the movie hall? Right now, The simplest way to understand is the term that's used for these things, CRM, or customer retention and management. Movie theaters have recently seen a burst of moviegoers coming back to the cinema halls because of blockbuster success of both international films and Indian films back to back. So the last quarter or so has been the best quarter in the last half a decade, or even in a decade, as far as footfalls are concerned. Obviously, movie chains don't want that momentum to slip. And obviously, they don't want the momentum, the kind of footfalls to happen only when there are blockbusters happening, but to sort of keep the momentum going. So this is clearly an effort. PVR, one of the biggest chains in the country, making it a point that, like, now that you've tasted quote-unquote blood, if I may, in the sense that the fun and the joy of being at the movie halls, let's keep that taste going.
Absolutely.
So that's the fundamental idea behind something like this.
All right. Karan Torani, Senior VP, Lara Capital, joining us here on the show. Karan, thank you for taking time. Good to have you back. What sort of impact PVR is expecting? I mean, Krishna said this before we started the show, that this could be revolutionary, come to think of it. I don't know if 10 movies are launched every month. I don't know if somebody would be able to watch all 10 movies, but you pay 700 rupees and you watch 10 movies, which is 70 rupees a movie. This is groundbreaking.
Yes, absolutely. I think, this clearly goes to show that fundamentally the business is under pressure as far as frequency is concerned, as far as, even content is concerned. So I think if you look at occupancy levels, we have seen certain quarters where the occupancy levels have reached pre-COVID or probably, moved closer to pre-COVID. But on a sustainable basis, I think, occupancies coming at these kind of levels of 28-30% on a quarterly basis seems to be a challenge, because it's only the large budget films which are doing well. Again, the point is that small, medium budget content is not doing as good as the large budget films. And you have close to 15 to 17 large budget films in the entire year. And you cannot really piggyback, just on those films doing well and driving occupancy and box office for the entire year. So I think this is a strategy to actually drive frequency, and in terms of target audience, they are looking at the youth, the housewife kind of audience who would want to visit cinemas. As you rightly said, I think there's a low likelihood of watching 10 movies in a month. But I think, we've got multiple genres now. We've got regional genre, we've got regional films which are dubbed in Hindi. We've got, English films which are dubbed in Hindi as well. So there could be a potential to watch at least 4 to 5 films a month. Nonetheless, it's a very good tactic to pull audiences back into cinemas and, drive some sort of efficiency, because occupancy levels typically on weekdays are less than half of what they are on weekends. And cinema is a high operating leverage business. More than 40% of their costs are fixed in nature. So whether 10 people come to the auditorium or 20 people come, it doesn't make a big difference to them as such.
All right. And what sort of subscription is PVR Inox expecting at the moment? Has there been enough interest in the market just as yet?
So I think if you look at the promotion, they've clearly mentioned that this kind of a plan is only for the first 20,000 customers. Now, if at all the number remains at 20,000, it will have a very minuscule impact in terms of the overall financials of the company, because, in terms of overall footfalls, this is less than 0.1% of the total footfall. So there's no impact if this scheme is limited to 20,000 people. But if at all this offer is extended for more time, or, for more, customers rather, this is bound to have a positive impact in terms of occupancy and in terms of footfalls. It may not be as big a positive impact in terms of revenue, because ticket prices will come down close to about 15 to 20% on an average. But as I said, these 17% occupancy levels on weekdays can potentially move to 20 to 22% over the medium term if there is acceptance. But the bigger caveat here is the content has to perform. I mean, the content has to be up to the mark for people to come to cinema halls, so frequently.
All right. And we don't know if the 20,000 mark has been, achieved just as yet. We don't know if there have been 20,000 subscribers.
No, I don't think so. I think it's going to take some time, because as I said, the slate of content is also very slow. Also, one more data point to share is that in the post-COVID era, a number of Hindi films have come down substantially in terms of releases. So you had close to about 20 to 25 films releasing every quarter in pre-COVID times. Now that number is close to 15 to 17 films every quarter. So you are seeing a big negative impact in terms of the post-COVID era, in terms of the flow of content, the type of content. which
So
is
what
kind of
sort of
impacting
flow of
footfalls.
content do we have, Karan, at the moment? How many movies are releasing monthly? So if I were to, let's say, subscribe to a plan like that, how many movies can I really watch? How many movies release, including your regional cinema, mainframe Hindi cinema and the South Indian cinema total combined?
So typically, if you look at India as a market, we are releasing close to 1,000 to 1,200 films every year. This number in the pre-COVID times was almost 1,600 films. If you look at the breakup of this, we were releasing close to 250, 300 films, Hindi films every year, about 150, 200 English films, followed by a big range of regional films, which is across various languages. Punjabi, South is the biggest there, Tamil, Telugu, Malayalam, Kannada, everything put together. So I think broadly, if you look at the numbers, I think the number of films across the board have dropped by anywhere close to 30% plus. So looking at the numbers right now, we would be releasing somewhere close to say 600, 700 films annually throughout the year, which means roughly about 50 to 60 films in a month. But again, how many of those films actually go to cinemas for a long time, because some of them are there only for the weekend and then they are kind of moved out. Some of them are released only in about 100 screens, which is a very small reach as such. So I think if you look at the exact number, if you really want to take the numbers in terms of the films which are released at a reasonable scale, which is 500 screens plus as a scale in terms of size, you could potentially have on an average about 5 to 6 films every week, which is almost about 20, 25 films every month, which can be watched upon by the audience across various genres and languages.
Right, Karan, this is Krishna here. The thing I want to ask you is that clearly last quarter was one of the best quarters for movie halls in India. You had a rush of blockbusters from Barbie, Oppenheimer to from Rocky Aur Rani, Prem Kahani to Jailer to Gadar 2 happening. It was a great quarter. It sort of brought back the audiences to the movie halls like never before. In that sense, do you think plans like these, this is one idea from PVR, more could be done to sustain the momentum and keep pushing forward? Because at the end of the day, India is a consumption-based economy. The more we consume as Indians, from movies to everything, the better for us as an economy, isn't it?
Yes, of course. I think they are making, all the moves possible to drive frequency, to drive footfalls. It all started off with Cinema Day, wherein ticket prices were offered at very cheap prices last year. Then they went through promotional offers, wherein ticket prices offered steep discounts. They even started buy one, get one free. They even started unlimited popcorn. And now they started this subscription plan. So clearly, there is a pressure in terms of footfall, and the reasons is very clear. OTT is somewhere a threat, for cinemas, because you've got too much of variety of content over there. And even within OTT, if you look at the space, we are moving towards an ad-based model, which is a free-based model, wherein premium content is being offered free. So that's a bigger threat for cinemas, because cinema content is, behind the paywall. You have to pay to get into cinemas. So that's one threat which has become even more severe now in the post-COVID era, as it was in the pre-COVID times. The second thing is youth is moving away from cinemas in a big manner, because the kind of content youth want to watch, that is not there in cinemas across various languages. I think they have become very selective in terms of what they want to watch. They want to watch the film only if it is worth the experience and the time and money and effort. And third reason, of course, is the nature of content. The content has been below par. We have not seen, films doing well consistently. Small medium budget films have been a laggard even right now. Thankfully, the last quarter, as you said, was very strong, because we saw Gadar 2, Oh My God 2, and we saw Rocky Rani, Prem Kahani, Oppenheimer, Mission Impossible. All these are last ticket films which did well, fortunately, even Jawan for that matter. So I'm saying that, this kind of a thing may not come in every quarter, because it's a very tough ask. Close to 85% of Hindi box office even today comes from large budget films. So the more we have a skewed, split here in terms of films across various categories or, budget of films, the better it is for the industry. So they're trying very hard, everything
in the sense, a
possible.
loyalty program in that sense helps push those small and medium budget films, isn't it? They will get consistent audience, because those audience who have normally not gone to the movie hall, because they have a pass, they end up going and watching that movie, although it's not a big budget movie. So would you, in a sense, is it wrong to say that these kind of loyalty, schemes help those small and medium budget movies?
It could potentially help, but as I said, not in a big way, because you're looking at a very small target audience. It's typically, targeted to the housewife and the students, who could possibly go on weekdays, specifically in the 6 p.m. shows and 3 p.m. shows kind of number. Obviously, in the night shows, you could have other audience as well. But the occupancy levels are very low at, 16, 17% today. And at best, it could go to 22, 23%. I think another concern for them to watch out is that they will give these kind of discounts to the customers. Pricing will come from 220, 230 rupees for a ticket price to 70 rupees. But the bigger problem here is distributor share. I don't think producers in the country are willing to, shelf out or, kind of make losses because of this. Because clearly, if you look at the distributor shares, they are fixed at 46% of this current ticket price. And I don't think producers are willing to kind of let go of their distributor share of the old ticket price. So if they continue to charge a distributor share of 46% of, say, whatever, 230, 240, they will still ask for a distributor share of 100 rupees or 110 rupees, which means that they'll have to shelve out much more than what the audience pays as ticket price. So we'll also have to check in terms of whether this model is sustainable or not. Because if the audience comes in, there is a positive impact. Definitely, you can see better ad revenues, you can see higher F&B revenue. But that is provided this audience spends on food. Otherwise, it's a loss-making proposition for the industry.
Karan, it feels like with a loyalty program like this, theatres are doomed if they do, they're doomed if they don't. If they don't, they are currently, are at a 16 to 20% occupancy level, could go up to 22 if a program like this works. But if it works, it hurts
on weekdays.
On weekdays, and then it hurts their bottom line if they are to launch a program like this. What is your outlook? Would it be fair to say at this point that in a war between OTT and theatre goers, OTT has clearly won the game, or is there still hope in horizon?
I don't think anybody's won the game here. I clearly believe that both are here to coexist. I think it is just the potential growth, and it is just where the industry is heading. So, a year back, OTT industry was heading towards SWOT, behind the paywall. You had to pay for the content that you have to watch. With Jio Cinema coming in, offering IPL free, with Disney Plus offering, World Cup free, I don't see ARPUs increasing on OTT, which means that other OTT platforms may not be able to raise prices, or even they might become free. So if that becomes the case, then you have more variety of content free of cost, which becomes even more tougher for cinema. So that's one thing which is there. Secondly, I think in terms of cinema, they are doing the right thing by trying out multiple things in terms of ticket prices. But I think dynamic ticket prices is the future. The only way they can come out of this entire thing is, if at all producers also start to cooperate in this matter, because I think ticket prices eventually have to be priced basis the nature of budget of the film. It could be priced basis the occupancy level in that particular theater. So if the occupancy is high, you charge a higher ticket price. It could be priced basis, off-peak hours, like, weekday, weekend kind of thing. So I think they could move in line with the aviation industry, where the pricing is very different basis the demand. So, and plus the producers have to support them for a lower distributor share or for a flexible distributor share.
Isn't dynamic pricing already happening? Has it already?
It is already happening.
Right.
It is already happening, but in a very small manner. They just tried out this model about a month or 2 months back. But now I think they need to pick it up to more number of screens, and they need to do it more actively, because that is the way ahead. And dynamic pricing is happening by a very small margin today. So, for example, if you look at a small budget film, the pricing for that is 200 rupees on an average. For a large budget is almost 350, 300 rupees. I'm talking about the average ticket prices. The gap is only 40%. This gap has to widen further. So for a medium budget film or a small budget film, you could actually, give it for 100 rupees. But the point is, will the producer agree for that distributor share? Will the producer agree that, okay, fine, I'm okay to forego my distributor share. I'm okay to, propel more footfalls for my cinema. That's a big question mark.
All right. I think it's going to be...
I just have one thing to say at the end of it. Before we wrap things up, there are so many question marks, but the one thing is that the joy of watching movies at the movie halls, it's one of the most classic things to do, and I think a lot of audiences are rediscovering the joy, anticipating a big release.
Numbers are not telling that picture.
Right. You have a Barbie and Oppenheimer. You saw the kind of excitement that got created. You see the kind of excitement South Indian films like Jailer created, Gadar 2 created, Rocky or Rani or Prem Kahani. People who haven't gone to the movie halls in a very long time. People are very skeptical about going to the movie halls. They finally got back to the movie halls. I am an optimistic person.
All right.
Right. On the back of a good quarter, I know the numbers don't sustain, because the movie business is like that. You can't have a blockbuster every week or every 4 weeks. If you get 10 blockbusters a year, it's considered a great year. So my hope here is that people rediscover the joy of stepping out of their homes and then they're not staying on their laptops, and hoping that they watch shows like this and then go to the movie hall straight.
All right. I'm not sure how happy they're going to be about dynamic pricing, though, having to pay 400 rupees to watch a movie and then 200 rupees to watch another movie. I think people are still likely to pay pay less to watch the same movie, or perhaps watch any other movie for that matter.
Absolutely.
But Karan, thank you very much for joining us. Thank you for those insights. Appreciate you taking time out.
Thank you.
And with that, it's a wrap on the show. Thank you for watching.
Hello everyone, Namaskar. I'm music composer Ricky Cage. 3-time Grammy Award winner and a United Nations Goodwill Ambassador. And you're watching me on First Person on News 9+.
This and more streaming now on the world's first news OTT, News 9+.